right? I mean, when we first started in the industry, a large majority of our client base was 1099 centric. We were dealing with predominantly non-asset based operators, and so we had, a package of coverage from general liability to cargo to non-owned and hired insurance, and away we went. And as the landscape has evolved and you've had challenges that have come against the 1099 model, you've seen more of business operators transition to more of an asset-based operation, or even, as we just mentioned, hybrid risks, where they're utilizing both fleet and non-fleet, which present a lot of unique challenges in the insurance landscape. So that's your first disruption, right? When we talk about IC misclassification, the 1099 model always under attack, and why we've seen more of this transition more into the hybrid operators. But now, in the last couple of years, we're really faced with what we like to call the Uberization of the industry, right? Whereas a lot of operators who are utilizing 1099 drivers, particularly those whose 1099s are operating under your authority and small personal passenger autos, are doing so with the utilization of personal auto insurance for the vehicle. And for a while, that wasn't an issue. If a 1099 driver was involved in an auto-related accident, it was a fender bender type claim, he would turn it into his insurance provider, the claimant would get their car fixed, and everybody would go on their way, right? We used to tell people that, it wasn't really unless you had a major event, a significant event, where you would run into claims being filed against the courier company, and ultimately the necessity of the non-owned hire coming into play. But with, the invention of Uber and companies like Lyft, it's really shown a light to the personal insurance underwriters of what's going on out there. People might be working their 9-to-5 job and then moonlighting in the evening, delivering for Uber, delivering for DoorDash. And that's not what, the personal auto insurance was intended to insure. So now what we've seen on our side, and I'm sure others can attest to the same, is ultimately more claims coming against the courier company. The fender bender type claim that used to be paid by the personal auto insurance of the IC is now coming all the way to the courier company, because ultimately the IC's insurance is declining, or the claimant is lowering up more quickly because they're finding out during the course of discovery there's another party behind here, and there's a little bit of dollar chasing. But ultimately, it's all coming back to the auto policy, the non-owned and hired, or the contingent auto, if you will, for the courier company or the delivery company. And that's continuing to change the landscape of the space even further, more disruption, ultimately, in terms of how we choose to insure that risk.
Yeah, prior to Uber and Lyft and DoorDash and all the above, the question wasn't even really asked when there was a minor fender bender. Now that's the first question any adjuster or attorney is going to ask. What were you doing at the time of the accident, right? So that's what's coming into play. And the other element, while everyone thinks technology is wonderful, and it is, unfortunately, that's led to bigger issues, being able to really hone in on what the individual is doing at the time of the accident. So they know, because of dispatch systems and whatnot, that the insurer or the driver involved in the accident was actually in course of a delivery at the time of the accident. So with the typical exclusion under a personal auto policy, that's why we're seeing, probably 9 out of 10 claims being denied under those scenarios, where it was probably the reverse of that 10, 15 plus years ago.